In 2008, an entire country nearly went bankrupt, not because of war, not because of invasion, not because of natural disaster, but because of banks. Within days, the financial system collapsed. People lost savings overnight, businesses failed, the currency crashed, and for a moment, it looked like the country itself might not survive. This is the story of how 3 banks almost destroyed Iceland. Before the collapse, Iceland looked like a financial miracle, a small island nation with a population smaller than many cities. Yet somehow, its banks were becoming giants. 3 institutions dominated everything: Kaupthing, Landsbanki, and Glitnir. These banks borrowed enormous amounts of money from overseas. Then they expanded aggressively across Europe. Luxury investments, foreign acquisitions, high-risk financial products. Money flowed everywhere. For a while, it worked. Icelanders became wealthier than ever before. The country transformed almost overnight. Expensive cars filled the streets. Luxury lifestyles exploded, and the banking industry became a symbol of national pride. But underneath the success, the system had one fatal weakness. The banks had become far too large for Iceland to save. The banks kept borrowing more and more and more. At one point, the combined assets of Iceland's banks became several times larger than the country's entire economy. Think about that. If something went wrong, there was no realistic way Iceland could rescue them. But during the global boom of the 2000s, almost nobody cared. Easy money flooded international markets. Banks everywhere were taking dangerous risks, and Iceland's banks pushed harder than most. Executives believed the growth would never end. Profits looked massive. Investors kept pouring in money, and just like many financial bubbles, success created overconfidence. The banks became addicted to expansion. But then came 2008, and suddenly, the global financial system began collapsing. When the global financial crisis hit, investors panicked. Credit markets froze. Banks stopped trusting each other, and Iceland's financial empire suddenly ran out of money. One by one, the banks failed. Glitnir collapsed first, then Landsbanki, then Kaupthing. Within days, the entire banking system was effectively destroyed. The Icelandic currency crashed. Imports became extremely expensive. Businesses shut down. Families watched their savings disappear. For ordinary people, it felt like the country itself was collapsing. And because Iceland's banks had expanded internationally, the crisis spread beyond Iceland. Foreign governments became involved. International panic grew. At one point, the situation became so severe that the United Kingdom used anti-terrorism laws to freeze Icelandic bank assets. A shocking moment. One NATO ally using emergency powers against another. The world suddenly realized how dangerous the situation had become. As the crisis worsened, anger exploded across Iceland. Thousands of people filled the streets. They blamed politicians, bank executives, regulators. Many believed a small group of powerful people had gambled with the future of the entire country. The protests became known as the kitchenware revolution. Citizens banged pots and pans outside parliament buildings, day after day. Eventually, the pressure became too strong. The Icelandic government collapsed. Prime Minister Geir Haarde resigned. And unlike many financial crises around the world, Iceland did something unusual. Some bankers and executives were actually prosecuted. Several received prison sentences. For many people around the world, that was almost unheard of. For a while, Iceland's future looked uncertain. But slowly, the country began recovering. Strict financial controls were introduced, the banking system was rebuilt, and over time, the economy stabilized again. Today, Iceland is often studied as one of the few countries that allowed major banks to fail instead of fully rescuing them. But the scars remain, because the crisis revealed a terrifying truth. Even a stable country can collapse quickly when financial greed grows beyond control. And sometimes, a handful of companies can put an entire nation at risk. In the end, Iceland survived, but the collapse changed the country forever. Because people learned something dangerous about modern finance. Banks don't need bombs to destroy economies, just debt, greed, and the belief that growth will never end. And when the illusion finally breaks, entire countries can fall with it.